there are three panelists. Nadeem Ellahi, I see him, and can the other two panelists also please open their videos. So Faisal Aftab and Mohammad Yar Hiraj from One Load. Thank you. So I see Mohammad and I don't see Faisal. Thank you. Great to see you. And thank you for putting that background on. We'll just give it 2 minutes because it has been a long day and back-to-back presentations. I did stuff myself with coffee and put it right next to me, so I'm good, but I'm sure, we have had more than 100 people throughout the day. Right now it has dipped to 86, but I'm sure people will join in. Because for me, this is a very, very interesting session. I respect all the presenters who have joined. I've heard, I've met a few of them. I haven't, I've heard very highly and I've spoken with all of them. So thank you for taking the time for this discussion. What we wanted to discuss was the state of the overall market, the tech sector, the challenges, the opportunities. And I still don't see Faisal on the call yet. In the meanwhile, I suppose that he'll join, but let's start off with, so we'd love to start with you. Would love to, if you briefly give your background, and then we'll go to Hiraj, and then we'll go to Faisal, and he has joined us. And then I'll ask you questions about, where do you see the industry and what do you think are the challenges? We have, the presentations we saw till now were very optimistic. It actually made me very proud of Pakistan and what companies in Pakistan are building. And your company is one of them. It's your company. And I know we can't talk a lot about TRG, but I can say it that I think TRG is doing some fascinating work. The portfolio companies which you have, such as Affinity, IBEX, are something which we as Pakistanis are proud of. So over to you, Nadeem. Would be great if you can introduce and say some starting words.
Great, thank you, Ali, and it's a pleasure to be on this video conference with you guys. So my name is Nadeem Ellahi. I'm one of the co-founders of TRG. TRG, as you know, is an investment company that is focused on the business services sector, and it has made various investments primarily in the US. I currently oversee the company's back office operations from Pakistan. Pakistan is one of our major offshore destinations. We work in about 8 different countries, employ about 25,000 people around the world, and about a quarter of that population workforce is in Pakistan. So I have been in Pakistan for over a decade, and have been sort of watching the back office size and our exports from Pakistan continue to grow and get stronger and stronger. So really exciting times, and happy to be with you guys.
No, thank you. Certainly your team at TRG is like poster child for tech entrepreneurs, Pakistani tech entrepreneurs who are global. So when I was in, Yashisti did the keynote speech at LUM's convocation of 2002. I graduated a year later, but I heard him. And I think at that time it was still at Align. But that team, of course, we have grown up hearing the stories and reading up about the success of you and your team. So hats off to that. And it's extremely impressive. With that, over to Mohammad Yar Hiraj. Would love to hear more about a bit about yourself. I know you have a fascinating background in tech as a tech banker, and I've heard immense great things about One Load, and I think the work which you're doing will enable a lot of the growth in the overall digital ecosystem in Pakistan. So I think it's mission critical for Pakistan what you're doing at One Load.
Well, thank you so much for inviting me, and it's a pleasure to be part of this event. I've heard from wonderful speakers and very inspiring stories all day, and I'm humbled to be part of the lineup here. Just One Load, I founded One Load about little over 5 years ago. It's a platform it's an app that essentially focuses on digitizing the micro retailers. So the shops that essentially don't even have a door could just be roadside vendors and panwalas and very, very small businesses. So it's a stretch to call them SMEs. So we use the term micro SME or micro retailer. And the interesting thing is that these shopkeepers, they procure things from corporates, from companies, which includes financial services, whether it is mobile top-ups or provide services such as depositing money in your Easy Paisa account. So they work with corporates, and they also order from large companies like Nestle and Pepsi and others. And all their dealing in their life has been in paper and through physical means. So when I started looking at this space, the focus we had was that Pakistan is going to digitize with smartphones and changing demographics. 3G, 4G auction hadn't started then, but was supposed to be upcoming when we started looking at this space. And we realized that the first step of digitization is going to be your neighborhood retailer. So that is what we do. We essentially give them a platform or a way to settle and procure things from corporates. We started out primarily with digital products and services such as mobile top-ups, and then banking services such as depositing money into your bank account, etc. Through the app, they also serve the walk-in customers, so we actually collect data on the customers as well. And then going forward, we also intend to, or we already are providing them working capital loans. We launched the app in 2016. In about 2017 to now, we've served about 200 million walk-in customers. So with COVID, things have, it's beginning to grow again last 2 months, but we've had a tough few months because of, although our numbers didn't slip, they just didn't grow anymore. So for a bit. So that's sort of the quick summary of One Load, and happy to address more details down the road.
And thank you for that. But before I move to Faisal, Mohammed, can you please also tell about your background? I know your background, but I just want the audience to also hear that, what did you do before One Load?
Yeah, I have I started out in investment banking with Morgan Stanley. I spent a decade with them in their venture capital and tech banking businesses. And then I joined, I've attempted a couple of startups as well along the way, but I was also in politics in Pakistan, and I was a member of the Punjab Assembly for about 10 years also. And left the world of politics to come back to technology ventures.
Well, that's fascinating. And now moving to Faisal, one thing unique, I think, which common to all four of us on this panel, is that all of us have spent a lot of time outside. Nadeem was in the US. Mohammed, you worked in Morgan Stanley. I still live in London. And Faisal, you had a successful career as serial entrepreneur in tech in the US before coming to Pakistan and then setting up Lakson Venture Capital. So would love to hear about your background, especially please do mention the companies which you have worked in and set up. Especially my favorite is MTV. So.
All right, thank you. By the way, really humbled to be here because you have a very esteemed panel and guests. So I'm honored that you actually included me here. So my name is Faisal Aftab. I'm the managing partner and executive director of Lakson Venture Capital. This is a pre-Series A venture capital fund, technology focused for Pakistan specifically. And it's part of the Lakson Group's Lakson Investments, which is a multifamily asset manager. They have a private equity fund and a venture capital fund. So that's the segment that I've helped build up and have led for the last 3 years. My background, I've been active in the technology space specifically for over 20 years. I started off at a consulting firm in New York, Deloitte Consulting, was focused on investment banking and broker-dealers, primarily and investment managers. So I was doing a lot of the technology risk consulting there, especially a lot of the trading platforms that came about in 2008 became more and more important. We were some of the guys that were doing the risk analysis there. So unfortunately, one of my clients, Bear Stearns, that didn't engage for that segment no longer exists. It was amalgamated into JP Morgan, which was also a client of ours. So we helped out on that side. From there, around 2006, I decided to move on to a company called National Financial Partners. They were, again, it was founded by Jessica Biblowick, who's Sandy Weil's daughter. If you ever read the book, Too Big to Fail, so she's mentioned in that. That's Andrew Ross Sorkin's book on the 2008 financial crisis. But the reason why I mentioned that is just like Citigroup, Sandy Weil's legacy, she built up a company that aggregated asset managers throughout the US. Primarily a lot of the broker dealers in the permanent life insurance component, which is usually for high net worth individuals. So I was there in the operational restructuring segment and M&A group, where basically we were restructuring companies, acquiring them, and building centralized processes for those companies for efficiency. Simultaneously, that's around the same time when I got a bug to essentially do something entrepreneurial. So I ended up setting up one of the first television channels in Pakistan, which was Indus TV. And there used to be a brand called Indus Music. So at that time, I was based in New York, decided to bring the MTV license to Pakistan. And we launched that platform. Did really well. Then in 2008, roughly, or actually no, 2012, I actually moved on to scale a company in Silicon Valley. It was based out of New York, but the company was based there. This was in the IPTV segment. That was the underlying protocol disruption at the time, where you had video over IP essentially disrupting, and a lot of platforms like Zoom, the one that we're talking on, they started coming about. So scaled that. Intel Capital came in, exited some of my shares to Eros, which is a Bollywood company. They came in subsequently. Eros now, it's like similar to HBO Go. That company was called Cloudstream Media. And then simultaneously at that time, I also started investing a lot of my own capital. While I was doing the MTV stuff, I'd built up a huge business on the satellite and cable front. So at a relatively younger age, had cashed out. So I decided to start investing, made a lot of money, lost a lot of money also. So I think to be a good investor, you have to actually lose money to realize where not to actually put money in, got more involved in global macro stuff. So during my learning period, I think one of the main places where I learned venture capital was 500 startups. They were a Silicon Valley seed fund. I became an LP in them. I was roughly the 10th or 11th check to Christine, Sai, and Dave McClure when they were raising as first-time fund managers like myself today. And just looked at a lot of companies, Twilio, TalkTest, some of those have gotten really big now, subsequently. And then I realized that, in 2015, I realized that we have a global macro problem. This obviously concern rose in my head because I was defending my own portfolio, and I started realizing that as central banks are printing away, we're eventually going to move to negative interest rates. Since that's the only, we've almost been backed in a corner like Japan was in the 90s. And then I started looking for economies on the planet that would actually do well when developed reserve central banks go negative. So in that, what I realized was Goldman Sachs had aptly put out the next 11, as the monetary system seems to have a pattern as the way I see it when you go back the last 30 years. So 1998, we had a contraction, long-term capital management blew up, and subsequently you saw the Eurozone come online. So essentially countries like, that are not known as the pigs, Portugal, Italy, Ireland, Greece, and Spain, France and Germany's balance sheets were effectively used to make them creditworthy. Then in 2008, saw the same pattern with the BRICS. And so I figured that in 2018, it's probably going to be the next 11 or the next billion users now, as Google and Bain call it. And so then decided to start moving to Pakistan, set up a few businesses here. I also have a back-end company, tech company that provides services to PTCL in the IPTV space. Their smart TV setup. We do a lot of the algorithms for that. And then initially, I didn't feel this country was ready in terms of tech investments in 2015, 16. So really decided to build businesses. And then finally in 2017, as we had a significant number of users, jumped into Lakson Venture Capital. And since then, I've been doing that. I'll dive more into my thesis on Pakistan. Just thought I'd give you guys a good overview.
No, that was fascinating. Thank you for that. And I have read that book, Too Big to Fail. It's a very good book. Nadeem, you have been, I think TRG has been the flag bearers of Pakistan. You guys have fought for it. It has hurt you. And we discussed this journey that, in the first presentation, especially with systems, that compared to India, there were a lot of things going against Pakistan, which held our growth, despite the fact that we had great tech talent, a lot of developers, English-speaking country, but that Pakistan factor held us back for a long period. Do you think that's changing now?
I think it's a fairly interesting time, right? And I think if you analyze our growth, I mean, if you look at the tech industry, I'm sure you covered it already, but if you look at it over the last decade, I mean, it was non-existent, right? Technology and IT services and software and BPO exports were non-existent, I think 15 years ago. They were very small, it was negligible. And then you see this industry sort of coming into shape in the last decade. The exports are now close to 1.2 billion. We have the 4th largest freelance population in the world. So things have started to, come into place. And, the growth rates have been fairly impressive. I mean, you've been growing at a double-digit growth rate in spite of all the stuff that you've seen around you, right? Of all the sort of the negative news. And, if you look at the industry, I mean, I always, and I'll focus a little bit more on because, IT and IT-enabled services is a vast field. But the area that, we focus on mostly, well, we do both, but, the area that, we feel has the most potential is business process outsourcing or IT-enabled services, right? If you look at that particular sector, I mean, that is really has been ripe for growth for the last many years. I mean, you have an English-speaking population, and you look at the key ingredients to success. I mean, you have a large population, you have a fairly decent telecom infrastructure, you have a fairly decent, sort of office space infrastructure and general infrastructure. And then the government has given handsome incentives. We've had tax holidays for over a decade now on income on exports. So I think you have all the right ingredients, right? And, what's been keeping us back, I think, is that perception factor, right? And that has always been, and we don't, it's like an elephant in the room. We don't talk about it, but it's there. I mean, it's there. And I think you talk to, the large Fortune 500 companies, particularly the B2C, companies, which are primary customers of outsourcing. And, most of them are, have roots or are based in North America. And they'll tell you that, look, it's just, it's just not on the radar. We already have enough presence in that region. In South Asia is all India, and so on and so forth, right? So in spite of all the efforts the industry and the government has made, we didn't have any success. And then comes COVID-19, right? And an interesting phenomena happens. I mean, the general push that you see in this pandemic is a push towards digitization, right? So you see rapid digitization, rapid movement from front office to back office, and sort of that whole sort of area starts to change. And then you see, the large drivers of our business are primarily these B2C sort of, companies in e-commerce and in telecom. I mean, that sector continues to grow, right? And, and then all of a sudden you have this phenomena where the entire world is in lockdown, right? And so, the folks who are, are the decision makers in these companies, and who need to now kind of balance off. I mean, on one side, they have their business going through the roof. On the other side, their customers are not being attended to. People are not answering their phone calls and, their emails and chats, and their entire service kind of back office has just fallen flat, right? And so what do you do? And then all of a sudden, sort of that Pakistan, that whole sort of negative perception kind of disappears. And, clients finally are asking us, okay, so tell us about it. We're really desperate. We can't travel anywhere. So it doesn't really make a difference, whether it's the Caribbean or the Philippines or India. So, we don't, so let's evaluate Pakistan on a pure, sort of numbers basis, right? And, we've always maintained that we stand very well when it comes to those core metrics, right? We have a large English-speaking population, exchange rates are in our favor. Our cost, I mean, just to give you a benchmark, Philippines, which is, currently the largest sort of exporter of business process outsourcing services, over 40 billion in exports, our costs are around 70% of, what, the fully loaded cost is in the Philippines. So we are very attractive. So all of a sudden, I think the door has opened up, and a lot of our customers that work with us in other parts of the world are saying, okay, let's give it a shot. Let's give Pakistan a try. And so we've seen phenomenal growth, right? We've seen, I would say, I think this financial year on the BPO side, we see, for Pakistan only, because that's the region that I'm working with. I mean, for our business, for Pakistan, our exports will rise about 30%. And this is incredible. I mean, in spite of all the challenges, in spite of what's going on. And so, I feel that sort of moment has arrived, right? And as, the industry will continue to look for, labor-intensive, countries where they can, source this work from. And so we are right there. So I think so far, so good. Let's see how it sort of pans out. And then, you can ask anyone, I mean, sort of, even the software businesses and the other companies, wherever you're, that whole push to digitization has just pushed up demand for our services. So across the board, these are very optimistic times, I must say. And, we'll see how it plays out. But, where I'm sitting right now, it looks, it looks fairly promising.
Thank you. That's a very optimistic and lovely story, especially the inflection point which you mentioned post-COVID. And Pakistan is indeed a hard country, and we are very resilient. We've seen a lot of difficult things, so I suppose that stands in our favor now because we can operate even in difficult times. And Mohammad Hiraj, your company has raised money. You have raised money from IFC. So, and financial inclusion is a big, big mission, and there's a big addressable market for you. And you, of course, have also been an investment banker at Morgan Stanley. So you have been on the other side of the table as well, where you have analyzed companies and helped companies raise money. How big was the Pakistan factor? And what were the challenges which you faced, and how did you overcome it? You are on mute, so you'll have to unmute yourself, or Taha.
Yeah, I got it. Yeah. So so the Pakistan factor was somewhat of a problem in the beginning, and one of the things that I think structurally, maybe the area we were focusing on did not seem very attractive to people either, which was that we were essentially focusing on the really small businesses, and people wanted to see, telco-led inclusion, telecom-led inclusion, consumer direct-to-consumer reach, etc. So, and the thought was that Pakistan has such the retail space is not documented, would be difficult to get to. So there was the underlying Pakistan demographic. We are of course not in the export business. Our business is just completely domestic. What didn't help was the rounds of devaluation that we had. So we have 3 times we had investors coming in, and term sheets would be signed easily, and then some devaluation would happen, and I think 3 times we had purchase agreements signed, and just maybe our luck, but things fell apart. And then eventually when we reached a certain scale, now currency doesn't really matter for us, and further devaluations won't matter to us, because we now, knock on wood, are on a trajectory where even through COVID we are growing, and despite the fact that it's a retail business and retail has been shut. So now we are no longer facing that issue. And I think maybe last year and a half or so, I think Faisal can speak to it more, but at this point, we have more capital available to us than we need, in fact. And that is a very positive time. This is a very positive time to be in Pakistan. At this point, the pressure I get from my board is why am I not spending money? And the other sort of perhaps a problem we have is that we turned, operating income positive, EBITDA positive in 2018. So I had to push it to a growth trajectory because we couldn't raise funds at a couple of times in our history. So the psyche changed from cash burn to cash optimization, and our model evolved and became a lot more efficient and streamlined through 2019, especially. So when we did end up closing the IFC transaction, and we had to ask them to give us less money than they normally do because we didn't need that much. And now it's an interesting time that we actually have, our board is more interested in who is a value add partner, and money is actually surplus. It seems that it is surplus in today's VC market. So very good time to be in Pakistan. And I think as far as the international sort of standing of Pakistan is concerned as a destination, given some of the discussions I have with people today compared to say a year and a half ago or 2 years ago, being in Pakistan is something that seems to be a positive from a venture investment standpoint. And I hope it stays that way, to summarize.
No, absolutely. I hope that too. And I'm sure companies like yours and the success of yours would actually make it more attractive. And I totally hear you on the FX point. I had the same experience with KTrade. We have an app. It's a Robinhood of Pakistan. We were raising money. And after 6 months of conversation, the guy said, "Oh, but what about Pakistan FX?" And I was like, I can't control that. That's not something in my control. But in hindsight, that turned out to be a blessing in disguise because COVID happened and our growth went up. From signing up 1,000 clients per month, we ended up signing up 1,000 clients per day. So certainly things have changed, and we are in the same boat as you are. That now we are investing and we want to invest more, and we have cash. We have cash. We don't, and the growth, the profits from the growth has helped us. Faisal, I want to come on this point to you that both Nadeem and Hiraj have mentioned that there is a change, and there is a change in the perception of investors, overseas investors. There's a change in the perception of potential clients. You deal with local investors because your fund is the only Pakistan domiciled venture capital fund. So you deal, your LPs are all people based in Pakistan. Do you see a change in them? Is there a greater reception to tech companies? Is there a greater willingness of large industrialists in backing early stage technology companies in Pakistan?
Absolutely. So I remember the ideation of this fund in 2017, when we first started having conversations about venture capital and technology. The most common question I would get is, what are you going to be investing in, like servers and email systems? Because there was no departure between regular tech platforms versus like actual technology services or technology outsourcing services, right? What I sense, especially in the Gen 2 and Gen 3, as they're coming and taking helm of affairs, taking control of businesses, the appetite there is a lot higher because they've gone to school abroad, and most of their academic training basically has already indicated to them that we're heading into the information, in fact, we're already in the information age. I think COVID just pretty much confirmed that. Everybody got the memo post-COVID. So initially there was a lot of pushback in the sense that it's something, yes, very intriguing. We want to get into tech, but the risk appetite wasn't there because obviously a very highly risky asset class compared to bonds and stocks and your traditional investments, right? So I'll share something on screen with you guys. This is how I convince a lot of our investors, because I told it like a story, basically. So if you bear with me for a second, it's a chart. Let me know if you guys can see the screen.
We can.
Okay, perfect. So and one of the reasons what with Mohammed and Hiraj and everyone, they're feeling that tech is suddenly accelerating. It's a very calculated rationale behind it. We have to almost go back to the period between 1914 and 1945, where the last transition was occurring. This was from the agrarian age to the industrial age. And you also had the confluence of a rising empire, the American empire, disrupting an existing empire, the British Empire, which was primarily an agrarian empire with limited industrial waves in it. But then the Americans actually had perfected the Industrial Revolution in essence. And post World War I and II, you ended up having that disruption. The new barons were essentially the industrialists, and the landed class, the feudals, the princely states, the monarchies were disrupted into essentially the nation state. The reason why I always mention that is because it's very important to see what point of time we're living in and why Pakistan is suddenly important, where it wasn't as important 10 years ago or 15 years ago. So today, if you look at what we're going through, effectively, if you look at from the year 2000, the rise of China, till 2020, you basically had the same essential disruption where China has attained technology parity with the US or attained symmetry. And so you have a rising empire disrupting an existing empire, and that was primarily an industrial empire with I would say fairly big technology disruption. And China in the last 20 years has basically, in my opinion, reached parity today. In the next 2-3 years, will probably exceed some of the American technological expertise. Some of the charts in front of you that I'm showing, the reason why I like to share this is if you look at specifically every time in history where you've had the relative strength of power of one empire go down and where there's a cross in the system, subsequently after that, you see a major shift in the system. And we're actually, this is slightly dated. So we're actually pretty close to that symmetry point right now, right? So hence you're seeing such a rapid change in the world as we enter this tech stage. So for Pakistan, specifically when you look at it, what's going to be the outlier in tech? And this is this year, I mean, to answer your original question, this year what I've seen is every single person is calling to ask for co-investments in the fund. And when you look at deals directly, so the local appetite has increased significantly in the last year, right? Because they got this memo that I had shared with most of their fathers or family members in 2017 and 18, addressing the demise that was coming potentially of the brick and mortar systems. So from a technology point of view, the way you have to look at Pakistan is we are an undervalued asset because we have a massive informal economy. And we're currently in the protocol disruption known as the exchange of value protocol disruption. And that's what One Load essentially is. It is one of the premier components of that, digitizing anything that's in the informal side through digital payments. Once you get caught up in that digital system, essentially the concept of the black economy doesn't exist. And from our fund's point of view, we're fixated on that. So even when we invest in portfolio companies, we're literally just, all we're looking for is a use case for either EasyPaisa, JazzCash, so everything from e-commerce to travel sector disruption. Ultimately, the underlying bigger money is always going to come into payment platforms, and then everybody else is going to integrate into them. And I think that component everybody's seeing across the board in Pakistan. I'll come back more to these slides at a later stage to speak more on, but I can give you a quick summary. That one of the things that tells you that we're officially in the information age is that if you look at the S&P 500 in the US, 10 years ago, roughly 10% of the aggregate market cap in the top was tech. Today, that number is sitting at 30% and almost taking 3 to 4% a year. I would say almost a quarter eating up the S&P 500's weightage, right? The rise of digital payments is extremely important. Again, as I mentioned, it's the exchange of value disruption. In essence, what we're seeing is the disruption of the SWIFT system. And that's where this confluence of the two empires come in, the Chinese and the American, where you've got alternate payment mechanisms, partly with blockchain and a lot of these other payment systems that are coming up that Ant Financial's creating. And geopolitics, to quite an extent, plays into that as well. And consequently, you're seeing a lot of the retooling around us, from everything from the GCC to India to China and Pakistan allying, and Iran potentially thinking of joining a bloc with Turkey, Qatar being in the middle ground also. So all this is playing into the same tech disruption or an empire disruption, right? Where the new empire, or I wouldn't say that the Chinese are going to become at least an empire anytime in the near future. They'll become a regional empire, and then they'll become an empire maybe 50 years out if they play their cards correctly. So this is an extremely important component of it, and underneath it, the exchange of value protocols is actually cryptocurrencies, and those are actually nothing more than protocols, and 99% of those are going to actually fail. But it's no different than when we were having the the voice over IP disruption, and you had about 10 players competing for space. So you had everything from from Flash to QuickTime. Most of those players don't exist today, and eventually DivX won. You had the same play out happen during the voice over IP disruption, multiple protocols playing out, and then essentially one or two won. And that same layer is what you have to base Pakistan on. And then I'll leave it, the last end element of this I'll leave with is that FATF, OECD Common Reporting Standards are all interlinked with this tech disruption, because ultimately they are hoarding, they're pushing documentation of the informal economy. There's no concept of hiding cash in offshore bank accounts, or essentially countries will eventually go cashless in the overall system. So I think most smart money in the country realizes what's going on, especially post OECD common reporting standards, because a lot of people were impacted by that. And so they're kind of aware of the structural changes in the world, and they see that technology is going to play a very important role. I'll conclude with that, bringing you back to your original point.
Thank you. Thank you for that, that perspective, historical and intellectual. And this is the perfect combination, because as Nadeem said, the efforts of likes of Nadeem and TRG have now made clients, large customers of Pakistani tech, more positive on Pakistan. The efforts of the likes of Hiraj have made global investors more positive on Pakistan, and the efforts of you have made local capital more interested in this asset class. And you gave the example of S&P, and in my report, which I published last week, I quoted the numbers on MSCI Emerging Markets Index. So in 1997, tech used to account for 1.8% of MSCI EM. Today, it's 33%. The top 6 companies on MSCI EM are all tech companies. And guess what? Pakistan tech, what is tech of Pakistan's index? It's 1.5%. So I have no doubt that we'll see this change, which we have seen in the US and then in emerging markets. And now it will come to Pakistan, because there's all this capital which can come in the market. And that's the purpose of this conference. And we started off earlier talking about growth enterprise market, which PSX has launched, where early stage growth tech companies can go public. And that's a big focus area for us at KSB. My colleague Talha, who's on the call, that's his first goal, to encourage early stage companies to go public. So I think this is going to play out. Nadeem, follow-up question to you. Your TRG is, of course, an investment fund. You have invested a lot in the US. Will you look to make investments in Pakistan as well? You are on mute, so you'll have to unmute yourself. Taha, can you unmute Nadeem? Yes, I have control. Let me check.
Yep.
Okay.
Sorry. So I think your question was, well, the purpose of TRG is obviously different, right? It was set up for a particular reason, and the reason was to build a sort of a use the back office service capabilities that we could and leverage Pakistan's labor pool, right? And we've done that successfully. So I cannot comment on what's next. Yes, I think the founders have that experience, and they've taken something, an acquisition-led business and sort of delivered success, in terms of developing Pakistan as an export market. So I would say yes. I mean, there is obviously an opportunity there now, whether it's TRG or somebody else, or a group that sort of leverages that. That is all. We'll see.
So Mia Kulpa, as in Nadeem did highlight to me that he because of compliance, they wouldn't want to talk about company specific things. I just couldn't help this question, so my fault. But I would ask you another question. You hire a lot of people in Pakistan, and especially in the area of AI. And for Pakistan to grow in the IT services space, demand is there, as you pointed out, that now clients are looking at it. But do you find good enough talent? And do you think that we have enough capacity to deal with the global demand in terms of the talent which is available?
Very good question. So I think, once again, you have to sort of parse the industry, right? If you look at the IT-enabled services sector, or the business process outsourcing sector, where the skills you require are fairly basic, right? You need IT literacy, you need ability to converse or understand English or write in English. If you look at that pool, then there's a lot, right? And the opportunities are tremendous. The pool is unlimited, so we are just at just swimming at the top. We haven't really dived into it at all, right? So there's a lot of opportunity. When it comes to sort of software engineering and skills there, we do have challenges, right? Scaling will be a problem as we grow in that area. We just do not produce the large quantum of engineers that we require. I mean, you have like 5 7 good schools in the country. You produce hardly, I mean, just to give you statistics, I mean, the official numbers are we produce about 30,000, graduates of computer science. And really, there's, if you look at it, only 10% of that pool is really employable. So there's like 3,000 to 5,000 people that the entire industry sort of, starts to, converge on. And the second tier and the third tier schools don't produce, the talent is just not employable, right? So we have to, I mean, one thing we have to do is obviously we have to take that talent and bring it up to par. And as large companies scale, they will probably do that. They'll have to develop and invest in training and development in-house to bring that up. So yes, I mean, on the higher end, there are challenges, and that will be an area that will continue to be the case. So we, for large scale projects, we really cannot compete with the Indians, right? So there is no kind of hope or future in that area. But for niche projects or niche areas, we could build competencies around certain technology tools, or around artificial intelligence or data warehousing or analytics, and so sort of grow that, right? So and there's a lot of opportunity. A lot of Pakistani software companies who are successful are not like 5,000 people strong. They're small, and they kind of they're either product based or they are services based, but a very strong niche in a particular area. So I think that is a challenge. I mean, my excitement is around BPO. I feel that is an area that is ripe to grow. We have everything, all the right ingredients in place, and the business is out there for us to capture, right? So that area should see tremendous growth, and it's an interesting industry because what it does is, I mean, you look at the Philippines, right, and look at where they were 15, 20 years ago. The total exports, and 95% of their IT services or IT exports are BPO. They're not software services, right? And they're about close to $42 billion. That's like twice our largest export, which is textile, right? So imagine what it can do. And you go to, I mean, I'm sure you've been to the large metros in the Philippines, and they've transformed. I mean, now you cannot find talent in Metro Manila. You have to go to the provinces and work there, and people are still sort of. So I think this industry can really, I mean, it has the power to transform, or to create large scale employment very, very quickly. And then as companies develop, they then scale up the value chain. You start from BPO services, and then you develop your skills around more sophisticated back office and software engineering and so on and so forth. So I think the opportunity lies more in BPO, in my opinion. Obviously, I'm slightly sort of biased in this area. So the opportunity lies more, here because of the talent pool that we have available. I mean, that's my thought.
No, thank you for that. And I do remember that TRG invests a lot in training of people, especially in the BPO sector. So when I graduated from TRG, was one of the first job interviews which I gave when I graduated from LUMS. Unfortunately, one of the few places where I did not get in, but certainly training was a big part of the thing which TRG focused on. And I think and Systems spoke about training earlier today, and so did NetSol, that they invest a lot in their people. I'll give you an anecdote that we launched an online MOOC called KASB Varsity, which had training on investments and also on introduction to Silicon Valley. With zero marketing spend, within like 3 days, we got more than 2,000 students who signed up on it. And these guys were actually going through the whole thing and completing. It was for free. But that at least shows that people are hungry to learn, and they want to do it on their own without any incentives to do that. Moving on to Hiraj, one thing which Faisal spoke about is that because of digitalization and the kind of stuff which your company is doing, there will be this massive shift from the undocumented economy to the documented economy. And in Pakistan, we have a huge undocumented economy. So this is a big paradigm shift which potentially can happen with the kind of work which you are doing. How big you think the opportunity is for A, the whole industry in the fintech space, and B, particularly for you? So how big is the opportunity for One Load?
The opportunity is, I don't think it can be quantified. I think it is so big that it can't be quantified. I can give you a small example of how big the informal market is. Right? So there are, our estimate based on some McKinsey reports and whatnot is there are about 4 million shops in Pakistan, and only 20,000 shops accept digital payments, Visa, MasterCard, etc. Right? So, and so that's just one metric to look at. But then let me just give you another example. Just the fruit and vegetable procured from within 100 miles of Lahore, arriving in one of the 6 mandis in Lahore, being sold at informal shops in Lahore, about 40,000 of them that sell fruit and vegetables. That's a 1 trillion rupee market. Just vegetables, 20 vegetables and 4 fruits. So this is the kind of quantification do. We've asked for government data. We've tried to figure out how much of that system can pump through our payment platform, how much of our knowledge of the informal roadside vendor can be capitalized through the chain that we are building. Last year we did daily loans. We, by the way, do daily loans. We did about 4 billion rupees of it last year. And it is 99.9% return on it, right? And so we make money through a certain mechanism on it, which is quite interesting. We don't actually charge interest. It's an overnight loan, and it's an indirect sort of loan, and it's connected to the distribution of products. So if you and that is only done at, there was only about 4,000 retailers that consumed those loans. And that was about, I think, 400 rupees a day type loan. And that average retailer, now it's a very low margin business. That average retailer, the pan wala, does about 40,000 rupees of throughput, and equivalent to the purchasing power of the pan wala. Now we did, we crossed 10 billion rupees last year with the pan walas, right? So just try and look at the quantum of this. Nobody has any idea of how far it can go. Nobody even knows. We had people at the agriculture marketing department, because a lot of our vendors are the small Kirana stores. We asked them how many shops are there in Lahore that actually do, are in the informal space. And they had, they couldn't even say whether it was 2,000 or 20,000. There was no concept of that. Nobody has ever done this. And when we send salespeople out, they always find more shops. So the issue for us, one of the things that Nadeem pointed to, we actually, my big challenge is, capital maybe was one in the past. My big challenge is to create products that I can deliver to perfection. And I know that if there is no issue in my product, if it's the same quality as what, let's say, Google delivers, my pan wala will adopt it and use it, and my business will skyrocket. I'm dependent on a system. One of the 2 leading telco wallets, we integrated a product with them. It took us 18 months. We turned 300 shops as a pilot on those products. We crossed 100 million in throughput during COVID in 300 shops. And the quality of that product wasn't very good. So we actually stopped signing up more retailers. We are going to spend another 3-4 months trying to make sure that my call center doesn't get hit with the dispute issues, right? The transaction settlement wasn't happening appropriately. So part of the challenge is trying to deliver products to the mass market while being connected to the existing system, which is not at the same level. The stools that we are trying to stand on are not very high, unfortunately, right? So the supporting system isn't there. The good news is that the industry participants, Easy Paisa, Jazz Cash, our partners, all the telecoms, several of the banks, they are at this point with COVID, they are no longer holding back on resource mobilization. They're saying, do whatever you need from us. In one of our working group teams, we have 24 people in the working group from a bank, and the CEO also joins it to underscore the need for that product to be developed to a level where it can actually be made available to the mass market. So the COVID has changed the will of the decision makers. And we'll get there. We'll get there. There is no doubt in my mind that we will get there. And I think COVID is the catalyst. The challenge that we previously faced was that the ecosystem we are working in, we are probably trying to move too fast compared to the rest of the system. And now I think the system is energized to work along with us. So the opportunity, I think, is beyond anybody's. There is no data that exists to quantify it, simply put.
Thank you. I totally agree. There's a massive opportunity for you. And as you said, the challenge is that you have to build the whole ecosystem and make the enabling environment. We see that the same in our industry. So in digital finance, for example, when I started with KTrade, digital onboarding was not allowed, still not allowed. We innovated and we tried to solve that problem. But now the regulator has finally allowed digital onboarding, both for overseas Pakistanis as well as people in Pakistan. So the building business, and the exciting thing about building business in Pakistan is that you have to create the whole ecosystem, and because it's all greenfield. But that's the massive opportunity for you. And the good thing is, as you said, that post-COVID, there has been this inflection point. So now everybody is supportive. The regulator, the client, the investor, the customer. So it's almost a unique opportunity. And Faisal, coming to you as your role as an investor, all of us have mentioned this thing that post-COVID, tech and digital has become primary. Everybody realizes that there's this shift which is not only inevitable, but it's accelerated as well. And it's reflected in the valuation as well. So if I look at the valuations of tech companies globally, they've all skyrocketed. Like when I used to cover Visa and MasterCard, they used to trade at 15 times EV to EBITDA. I think now they trade at north of 30 times. Some companies even more than that. And you in private markets in Pakistan are paying higher multiples. But when I look at the public market companies, the companies which spoke today, TRG, Systems, Avancian, they are still trading at multiples which are 1990 multiples, 6, 7, 8 times forward earnings or 10 times forward earnings. How do your LPs question you when you end up paying higher multiples? Do they say to you that, look, my business, this factory I run is valued at 5 times, and why are you paying that multiple for this hotel when I can build a hotel like that?
Sure. No, that's
and how do you deal with that?
So look, I mean, I'll start with the multiples of tech in the US, right? What is the market pricing in? The market is pricing in the titans of the new information age, right? So what you're seeing with big tech happen is, in essence, all of these guys are about to turn into fintech. And I keep saying it's the exchange of value protocol disruption, right? So what did PayPal just do with launching cryptocurrencies? I'm not saying that's the payment mechanism, by the way, of the future. That's just the back-end settlement layer. And you're seeing bank stocks move sideways. So what you're probably going to see in the next 24 months is Amazon and the big tech. I'm showing the big tech going up like this and bank stocks going sideways, right? You're going to see them start to acquire maybe Wells Fargo. Just they're not going to go apply for licenses in each state, right? Now, fast forward to Pakistan. I'm mentioning that as a relevance. There's a push because all these guys are getting demand from their capital markets, the ones that are publicly traded. So your FAMs in the US, Facebook, Amazon, Apple, Microsoft. Then you've got your Chinese tech platforms, Tencent and Alibaba as the big ones. Now you've got ByteDance in the game as well. They're out there looking for acquisition as well. Same thing's happening with Naspers, OLX, Delivery Hero. These are all companies with massive amounts of capital. I think I forgot Uber and a few of the other guys, but I think you guys get the point. So there's a global binge happening because as they're getting flooded with capital, they're doing growth by acquisition. So it's a lot cheaper for Alibaba to move into a country like Pakistan and acquire a platform versus trying to and do growth by acquisition than to do it, as we saw in the case of Daraz and via Ant Financial into EasyPesa. If they try to do that with a Chinese player, it's going to cost them $1 billion, $2 billion, right? And so that's what's pricing this up. And it's unfair to look at the old system and the new system in the same way. The analogy I do is that if you looked at people that were investing in Vanderbilt's railway and Rockefeller's pipeline, right? They were prepared. What was being priced in then was really different because they were pricing in for the industrial revolution. And so that infrastructure spending or the rails of the industrial revolution, a lot of money was going in, and smart money always sees it first. And that's exactly what's happening. So tech is going to be pervasive. I think in this decade, if you look at what the World Economic Forum has indicated to us as of last year and this year, repeatedly they say it, that the pace of adoption of technology in this decade is going to be faster than the last 50 years. The only thing holding us back at this point for tech to go completely pervasive is essentially the velocity of money. Payments is the main hindrance with capital controls. And what you're seeing with FATF and OECD Common Reporting Standards is the foundations being laid that you're giving the nation state the option that, hey, look, if someone's a tax resident spending 183 days or more in your particular country, we will send you their data of all their global assets, right? And the second component is everybody has to go cashless because cash, basically source of funds in cash needs to be traced. Let's get to the black economy. That means we go to digital payments. So you can't really compare apples and oranges is what I'm saying, because when I value these companies, for example, I'll give you a classic example, BookMe. We went into BookMe. BookMe, by the way, is the largest cashless e-commerce platform in Pakistan. They don't accept any cash, integrated with every single payment platform. We went in, gave them basically on a gross merchandise value multiple, on a 3x multiple of what they were doing at that time. Fast forward to just a year later, and one of the big VCs abroad is that actually works with Alibaba and some of the other guys is looking to place some multiple of 6. The reason again is because it's growth by acquisition binge. Do I agree with it? Absolutely not. I don't think that this markets are rational to begin with. I don't think the equities markets are rational anywhere on the planet. At the end of the day, the only reason why money is going into the stock market, especially today, is because central banks are printing money. And as currencies get debased, it's an inflationary hedge to go into the stock market, right? And so comparing regular multiples with VC multiples, at the end of the day, it's all a bubble. But that question does get asked, and it's very difficult to price in, explain that differential, because when Delivery Hero moves in and buys InstaShop just because they're ultimately a wallet play, right? So what they're looking and pricing in there is basically what economic activity can I capture. They don't care about the profitability. They just care about the gross merchandise value, or I would call it transaction flow through the system. So the measurement tools are very different is the point that I'm saying, because the idea is that as these companies turn into banks in the future, their objective is to try to get as many companies in different territories, almost like a battle, right? Like going out like an army and capturing territory. Their competitors are Uber, their competitors are Google, Facebook, Microsoft, and all the other platforms that eventually have an aspiration to be a fintech, right? And then they want to create a global master account where they'll actually hold all these transactions. So I'm just trying to explain how the entire valuation structure. I get into these arguments with Ernst & Young, or I'm not picking Ernst & Young, any of the big four, the auditors, when they're doing valuations in Pakistan, because they don't understand that top line component of gross merchandise value or gross transaction flow in a payment platform, where you actually have a multiple for that. Last year, Mohammed and I were having a discussion on what his valuation should be. So I won't talk about his numbers. There's a confidential discussion. But for example, the multiples on a payment platform in Pakistan today are ranging between around 0.5 of your total transaction flow, not your commissions, to 0.6. In India, that multiple today is around 1.27 to 1.5. I don't know what it is after Ambani's geos pump in with Facebook and Google. I'm sure it's gone up a lot. But the point here is that the market and the buyers are pricing in something totally different, because what they're seeing in the new world, in a way. And I'm not trying to sound like some, like philosopher in the future. That world is around the corner. I mean, it's literally as post-COVID, you can sense the acceleration in the system of how tech is being adopted. It's all being driven for digital payments, because ultimately the economy is money, right? And once we can quantify this money in real time, it changes the paradigm of how everything is measured, from your GDP in real time in countries down to a village, right? So that's kind of how you have to visualize this entire game.
Thank you for that. So I totally agree. As you said, there are two main factors: growth and the second, M&A premium. And as you said, that you gave the good example of the industrial revolution, and this is a tech revolution. So the growth will not be linear. The growth will be exponential. And hence the multiples which we see, which are based on backward earnings, are no longer valid, because future growth will just mean that the companies are still cheaper on future multiples, which is
and one thing I will add, there will be bubbles, right? So obviously, as interest rates fluctuate, we have bubbles in venture capital. They burst, and then again valuations come down. But ultimately, they always go back up because of this competition.
Because of the growth, and the second thing is, as you said, M&A multiple, the ARB. So if I'm when I was a CFO of SafeCharge, and if my company is trading at 15 times EV to EBITDA, if I pay 10 times for a company in Pakistan, that's still that's an ARB, because the numbers will go higher because I'm buying cheaper than my company. So in the US now, as you said, the tech multiples of global companies will pull up multiples here, because companies will be willing to pay multiples which are lower than theirs, as long as and willing to pay for that growth. So I suppose if that's the case, then we have to look at how big is that M&A premium. Coming to you, Nadeem, you mentioned that Pakistan IT services companies and IT exports have been growing by that 25% over the last few years. The base is small, but do you think the next 5 years will be better than the last 5 years? And if that's the case, should we see growth being higher?
Absolutely. I think this year alone, this fiscal year, I think the growth will be at least 30 to 40% higher than what it was. So you're looking at 40 to 50% growth this year. And then if we keep up with the COVID momentum, I think this could be, because I think, once you're over that hump, I mean, what was the hump? The hump was that, Pakistan's an unsafe place to do business. If you put mission critical work there, it'll get disrupted, and all those things, right? I remember 10 years ago, we were in very serious conversations with a global bank about, they were looking at, setting up a back office, and, they had one in India, and, they were very serious. And, eventually, folks who were, their business units across the world just, relented. They said, no way in hell are we buying any services from a Pakistan-based, location. And, so that sort of hurdle we have now crossed, right? So I think we should see growth in sort of 40 to 50% growth, going forward for the next 4 or 5 years. I mean, we can easily be at 5 billion. Our exports could easily be at 5 billion in the next 3 to 5 years, right? So we could easily sort of hit that point fairly soon. So I think I'm fairly optimistic. I think I'm fairly optimistic.
This is very, very interesting, especially for me as an analyst whose job is to find mispricing in stocks, and that's what we do at KSB. We advise investors where the mispricing is. Because I asked this question to all the panelists today: that do you think the next 5 years will be better than the last 5 years? And they all said it will be substantially better. And they all talked about this COVID inflection point which had happened. Yet, if I see the forecast which consensus analysts have, they're all factoring in a decline. And I think this is how we as analysts forecast, and this is true even, so when people used to value Visa, if Visa has done 20% growth for the last 5 years, they'll forecast 19, 18, 17, 15 over the midterm, 5 over the long term, and then a terminal growth rate of 3%. So nobody forecasts growth going higher. We forecast growth going down. And here is a case where we all know that's not going to be the case, or at least there's consensus in the industry that that's not going to be the case. So for me, that's a massive mispricing and an attractive opportunity, which makes
tech sector supply and demand, right? So when you look at the supply and demand of this of the equation, and which other country has a substantially large pool of English-speaking folks? I mean, which is very cheap, in terms of costs. I mean, we are amongst the top 2 or 3, right? There's not much there's not much supply of qualified people left in many parts of the world. They're fairly saturated. So I think from that standpoint also, right? I mean, and there are with the COVID push to digitization and to the back office. I mean, this will create that exponential demand, right? And with the exponential demand, they look for deep pools of labor, and we are just right there. So that's why I'm, you have to look at the overall market sort of forces as well, right? In terms of where the supply is. We're probably one of the few countries that have him at this point in time.
Absolutely. So a big pool of developers, so huge potential for growth. Similarly, domestic market being massive, digitalization just starting, 200 million population, half population under the age of 21, internet penetration increasing, moving from 3G, 4G to 5G. So it all looks very, very, very attractive and interesting. We are open for questions. We have 23 minutes. If you have questions, please write it down on chat and I'll read it. There is one question on education. I think it was perhaps to an earlier point, which Nadeem, you made. And in terms of, the talent and training that talent, do you think, and so I'll just rephrase the same question. Do you think that formal 4-year education from college is necessary, or can people just train on jobs and be good enough? And we are moving to the world of digital education and MOOCs. So can people just learn on their own?
I think, that's, the entire education space, I think Faisal probably has better eyes on that. That entire space is getting disrupted in a big way, right? So, places where we went to school with the sort of the real, the real sort of top brass university of the world are really struggling to attract talent because, all of that, take that down into digital education. So I think we are one country which is ripe for that, right? We could, I agree. Formal, obviously you need, sort of that 10, 12 years of your basic education to sort of, get your mind sort of thinking in the right direction. But beyond that, yeah, absolutely. In terms of technical skills or ability to build on your, on your, graduate or postgraduate education, all that is, there is a vast array of content out there that you can leverage. And, it is a fraction of the cost of what it would cost you to go to a, formal university. And then for us as well, for large companies like us and for, Systems and NetSol and all the others, I think the key barrier to training was, you needed physical infrastructure, you needed the tools. And now, all of a sudden those tools are kind of, the cost to acquire those tools and to build that content. That's sort of come down to a fraction of what it used to be. So, so for us as well, it's, as employers, it's a big opportunity. We don't need to think about sort of, to create sort of that large scale talent pool, for us. We don't need to have large, auditoriums to train people in. And, we could just simply use, most of the prominent digital learning tools and just be done with everything else. So I think for us as well, I think I see that as a big opportunity in terms of taking that sort of underdeveloped talent pool and making it, bringing it up to a par with our skills, right? And then, people themselves can do that as well. So I think a great sort of this mismatch, for example, for all the second and third tier schools, graduates that are unemployed. So digital education is a big sort of enabler for them and for us as well. So I think, I see this as a great advantage, and I think we will more and more we will leverage this. We're already actually working on it. We're working with several NGOs where we're taking sort of raw talent and using digital training and education to hone up their skills, and it's very exciting because you don't go after the same talent pool that everybody else is going after. You're going after a pool that does not have access to opportunities, and you're kind of helping them leverage that opportunity. So I think it's tremendous. I think, and I'm very optimistic in terms of the, if I look at the talent pool in Pakistan, it is as good as anywhere in the world. The challenge has been their access to, top quality education, top quality training, and now all of that has been disrupted. So the opportunity is tremendous, and the raw talent is there. So I think you will see sort of that, sort of that growth in training as well, and folks sort of raising their bar to get to that standard.
Thank you, Faisal. You have invested in a tech company, so any comment on how on this question?
Yeah, no, I mean, I agree 100%. First of all, the talent in this country is phenomenal. It was just access to education. I'll
Please
speak
also
a
tell
little
about a bit about the company you've invested in the edtech space.
So Knowledge Platform, which we co-invested with Beacon House, so that's showing the existing system is willing to understanding the disruption, right? Being the largest private school system. In essence, they do K through 12 education, and they're essentially augmenting the classroom. So in Pakistan, the biggest issue is the student-teacher ratio, where in essence you have one teacher to on average about 50 students. And so what Knowledge Platform does, they have a pretty smart algorithm in the back end that basically students come in at least once a week into a digitized classroom where they have clickers and they're assessed. And then it'll start giving you homework that's different. So let's say if somebody's weak in math, it's a broad statement. One person could be weak at a very basic level. One kid could be weak at multiplication and the other at arithmetic. So the homework given would be hone in on the weakness. And so I think that's a great, the reason why we like to play is that is a big issue. The subsequent component that they're entering into is obviously disrupting the tuition, because that's where the platform really comes into play. What I will say is that, when I look at EdTech, we study the industry inside out before investing. And what I felt for Pakistan is that, the shared economy, especially what we're starting to see with the next generation EdTech coming up with things like Air School, the ability to learn has really changed, right? So again, the biggest limiting factor today is the fact that only 1 million students out of 43 million school-going children have access to a device, right? So as we have local manufacturing, and that's what these tariffs are helping with to some extent, Oppo, Huawei, everybody's looking to set up local manufacturing in Pakistan. As the cost of those devices come down, we have microfinance lending programs, and they spread through the system. You're going to see that education is going to be not just limited to the privileged. You're going to have access by platforms, even like basic platforms like YouTube. You can literally go on there and teach yourself anything. Courses like Khan Academy and all sorts of people actually from Pakistan that are loading content, right? So it's actually a universe on its own. So we have to think of it very differently from the last 30 years. The way people can go and teach themselves literally online is very different. My best developer that I ever hired never came from any of the institutions, even in Pakistan. He was a self-taught gentleman from a humble background. And this guy disrupted a company in Silicon Valley. So that shows you, and this is obviously 5-6 years ago, right? About 7 years ago. But what I'm saying is that the potential in Pakistan is massive. And as Nadeem was saying, it's just the access. I'll leave you with this last thought. What Google is doing, I mean, they're turning around this entire concept of, the meritocracy, lack of it in education, especially higher education, by saying that, look, we're going to give accreditations, or we're going to back companies, and you don't even have to pay until you get a job, right? So when that type of stuff starts to happen, that pretty much changes the entire paradigm. So I'm not as worried about education. Obviously, at a K through 12 level, you need some core concepts to be a developer and have the basic resources come in. But subsequently, I think we'll have good skill sets.
Thank you for those insights and the anecdotes, especially the example you gave about the tech developer. It's very promising. Muhammad Yar Hiraj, there are questions for you from the audience, and I'm just going to read them. Essentially, there are two questions. The first question is that you are dealing with this massive challenge. Then the challenge is cash economy. People don't want to pay taxes, and there's inertia. How difficult is it? Has there been any change in that, like post-COVID, more receptiveness? That's the first question. And the second question, you can choose not to answer that, but I'm just saying it because I've gotten it many times again and again when people are asking what's the valuation on which IFC has given money to you. But you can. I'm conscious that that might be confidential, but I'm just saying it out because people have asked it.
I think we can leave it out of the public forum, that one. But on the challenges to adoption and challenges to cash converting to the electronic system. Taxes, the area we operate in, we always hear, and we've actually challenged our partners, and EasyPass is a very important partner for us. We also challenge them on this notion that the micro retailer, the mass market retailer, the mass market consumer is actually not being documented because of taxes. We haven't seen that at all, in fact. And the example is that we have 40,000 retailers. Some of them do 10,000 rupees a day of transactions through our system. We have full information on them. We know how much money they make on it. And frankly, our salespeople have never told us that a retailer has not wanted to sign up because of taxation issues. And of course, now that we are a regulated or part of our business is going to be regulated as an EMI with the state bank, we will be reporting. And when we've told our retailers that this is going to happen, they don't have any problem with it either. So if they're making money, they don't have any issues. And of course, we do withhold taxes on several of the transactions, right? A lot of digital taxation. The average retailer through our system, about 90% of the transactions that happen, the average retailer is actually, we're withholding 40% in taxes of their commissions. So it's so they are being taxed very heavily, generally, as per the ecosystem is concerned. But their desire to not be, if you give them a product that makes them money, makes their life easier, taxes has never been a showstopper. I've never heard this. We have 150 people in the salespeople in the field now. Nobody's ever told me. And we had this conversation very recently with some of our partners, banks, and they said the retailer doesn't want to accept, part of our play is to accept, have these banking wallets make payment as these small retailers. So the merchant acquisition play, where deploying a physical POS machine is expensive, and the One Load app as an acceptor becomes very important, and it's already in the hands of the retailer. So we can hopefully bypass the POS machine completely. And we're already, by the way, last month we touched 300 million of payments just through EasyPaisa, inbound payments from EasyPaisa to our retailer, and we don't actually have any advertisement saying that one can do that. There's no mention of that. So it was just a pilot. So the discussions we have is that what is holding the retailer back? Our view is that the industry, including us, our inability to give them what they want, simple, seamlessly, without any glitches, with a good service quality. If you give them that, taxation doesn't come up. And realize also that there are 200,000 branchless banking agents that exist. All their data is there. Their average throughput is 50,000 a day. And if the commission structure was to be increased slightly, that 200,000 agent network could become, between all the telecoms, that could become 500,000 overnight if you simply increase the commission structure. It's very, very commission dependent. So 500,000 retailers would, in our view, easily adopt any services if they're making money from it. And the fear of documentation is not there. So when we get this point that people don't want to accept digital payments because of documentation issues, we always come back and say, my answer is to the telecoms, each one of you has signed up 50,000 agents, got their ID cards, got pictures of their shops taken per state bank rules, put signs up there that they're accepting these things, and they're high throughput shops, right? The income may not be that high, but they're high throughput, meaning they're handling 50,000 rupees of cash a day. And if they don't have a problem being getting documented, why do you think the others would have a problem being documented? So we have to also challenge the conventional wisdom in a way. I keep coming back to this. The issues are on the supply side. They're not on the demand side. And as far as the knowledge base of the retailers, our app is in English. It's according to, we did a survey recently because we were collecting some data. We have about 40,000 active retailers today. About 5,000 said that they can't read English at all. And they're active users of our app because it's icons and numbers. Everybody can read English numbers, which by the way, wasn't the case in Bangladesh. Interesting, right? And in parts of India. because our Urdu numeral set is actually the way we write, the fonts we write it in, is less understood than the English one in Pakistan compared to rest of South Asia. So if you go to Bangladesh, you'll see the number plates of cars in Bangla. The numbers are in Bangla and in Bengali, and in Pakistan you'd see them in the English. You can have, so that's one way. If you go to South India or parts of India, you'd see the Hindi written in number plates, and in Pakistan you rarely see those. So somehow, our app is being, and we keep coming back to this, the retailers aren't demanding that you change it to regional languages. Why should we do it? And so, for us, the challenge is to actually move away from this notion that our country is exactly like everybody, all the other countries. We have our own unique, challenges, and we have our own unique population, but the user base is highly intelligent. If a retailer can make 400 rupees a day through an app, or increase footfall that helps him make another 5,000 rupees of product sale, they would learn English. So what Nadeem was saying, what Faisal was saying, our retailers are very digitally savvy, and they don't have a fan in their shop in July Lahore. By the way, the idea of this retailer digitization, this came a few years ago. I was in a very small, I come from rural Punjab, the heartland of Punjab. I was in a very small village, and there's only one shop there. And I was walking around, and I heard these two people, have an argument, or slightly heated discussion. And the argument was, the retailer was saying, the consumer was on credit and he wanted the bill settled, and he was saying it's going to rain tomorrow, so I need to go and deposit the money in the bank in the nearest town. And he said, how do you know it's going to rain? And he was showing him a Google weather page in English, in a town which has probably had no electricity other than maybe the local masjid and all that. So, and that was on a feature phone. This was a Nokia 3310 equivalent with this very small screen. And that's when I realized that this guy has had to use technology to make for his livelihood, and he is going to go through hoops to digitize himself, and he's going to convince everybody else around him and bring them to the world, to the digital world, because he can make money through that. So the demographic, we have very highly intelligent people. We just need who would do anything to earn a living. And I think providing the supply side issue, and I think the industry is working to solve them. So I'm very optimistic that we have a very, very bright future.
No, thank you so much for that. Thank you so much for that dose of positivity. At least in our financial sector, there's very little of positivity. I feel that people I generally interact with are very grumpy, frustrated, unhappy. I suppose media has to do a lot with that. So the preconceived notions are all about failure. In fact, we at KSB, we did this campaign called "Complain Na Karo, Invest Karo." Because people were always complaining, wo paisa itna kyun banate hai, power companies kyun paisa banati hai, sugar companies kyun paisa banati hai. So we said, don't complain about it. You can invest in the sugar company and become a shareholder and get the same benefit. So, but what you have given, thank you so much for giving those examples that Pakistanis are actually quite enterprising. They are intelligent, willing to learn, and they're also willing to pay taxes. It's not that they're all thieves and they want to run away with people. Common person is not like that. Nadeem, there's a question for you from the audience, and they're asking that, do you think that now, you mentioned that Philippines has a huge BPO industry, $40 billion. Do you think that it can spill over to Pakistan? Do you think that the quality of talent and infrastructure which we have, is it good enough for you to attract tier one companies, the big brand names?
Yes, the answer is yes, but there is a caveat, right? And that's a caveat that we have not discussed. And perhaps that's not the right this is the right forum, but that's about government policy. When you talk about large-scale investment coming from the likes of JP Morgans and RBSs of the world, I think they look at policy predictability, policy sort of continuation, and there we have a lot of work to do as a country, as a nation. Hiraj will will agree, as politicians as well, right? the policies that we I'm afraid that the policies that we are developing and building around the digital ecosystem, around data protection, around privacy, all of those are not in line with global best practices, right? So if JP Morgan is going to move 5,000 person back office, they look for those, right? They look for sort of policy predictability, and they look at policy. I mean, as far as exports are concerned, post 19 amendment, we still haven't figured out what the taxes will be on services. To your surprise and to a lot of people's surprise, the government of Sindh actually imposes a tax on exports of IT-enabled services, right? On exports. And that's just because it's not that they don't mean, they're sort of not well-meaning. It's just that the policy framework hasn't really caught up, right? And the thinking in the government hasn't really caught up, but it has to, right? Because the direction that we are going is actually not a positive one. And, I'm afraid to Faraz's question, I mean, the answer would be no. I mean, in those boardrooms, the decision will be, look, we don't know where this, what the policy will be. We go and set out, we transfer work, 5,000 people there, and tomorrow the government starts to tax exports, we are done. So I think we have to demonstrate that sort of policy continuity, and we have to demonstrate an awareness and sort of adoption of best practices around digital, policies and frameworks, right? Which we had set out on that path with with Digital Pakistan and all of that. So we need to continue along those lines, because if we don't, you will not get that large scale investment. I mean, I'm afraid it's not the most optimistic way to, but that's a struggle we have. We have to solve, and time is running out. I mean, we still haven't figured out what services are and how services will be taxed and all of those things. And then, so these things have to be figured out, and we don't have time, and we're running out of time. So I think, my advice and my sort of plea to the government would be that, look, we know you have an open mind. We know you're willing to sort of get these things done, but, we have to sort of take some bold steps, and the thinking has to be very different, which we have not seen. So that's one area we really need to work on. Otherwise, you will not get that large scale investment.
Absolutely. The path of an entrepreneur is never straightforward. We are dealing with challenges. That's what we do for a living. And, this today was KSB 68 years anniversary. And so so we know challenges and dealing with that. And, that's why we hosted this Tech Day, because we wanted to celebrate entrepreneurs such as you guys and what you're doing. And for the last 68 years, KSB has brought in more than $10 billion of investment in Pakistan. Now with our relaunch, digital with a big focus with our app, we have more than 100,000 people using it. And we want to give access to people, access to good investments, good entrepreneurs, access to research, and connect this capital with growth companies. So that was the whole purpose of today. Thank you for taking your time for this panel discussion. Thank you, Nadeem. Thank you, Faisal. Thank you, Mohammad Hiraj. And thank you for all the participants who